So you want to trade profitably. You watched all the YouTube videos and bought various courses, but no one has shown what needs to be done before opening a position. And today I'll give you a checklist outlining step by step what needs to be done before opening a profitable position. Be sure to watch this video to the end and subscribe, because I haven't seen such valuable information anywhere else. Here is our checklist. You can find it in my Telegram. The link is in the description. Now let's get into explaining these points. This checklist is designed for intraday trading but can be updated to your trading strategy. Point 1 is news. Before opening the chart, I study the news scheduled for the day. For example, if we have FOMC news, which will bring significant market volatility, I won't trade on that day because the statistic will likely be negative. If no news events are preventing you from trading today, mark it and move on. Point 2 is determining the direction of the daily candle. I'll show this on the chart later, but let's break down the table now. The first thing I do is open the weekly time frame. Then I determine our market structure. For instance, if we are making new highs but not new lows, indicating a ascending structure or bullish structure. Next, we look for our structural range and determine where our price is in a premium or discount market. Then, points of interest, POI zones, where price reactions may occur. We check if we are testing these zones. And lastly, we note liquidity. After that, we move to the daily time frame and go through the same procedures: structure, premium or discount market, POI zones, and determine the relevant liquidity. Thanks to these two timeframes, we can already identify bias and the expected direction of the daily candle. If both timeframes are in sync in a discount zone and testing POI zones, there may be several. It's logical to assume that the daily candle will be bullish. After determining the sentiment of higher timeframes, we move to the lower ones and do essentially the same thing. Determine trend direction, premium or discount market, where the price is in the structural range, and identify POI zones and liquidity. Always observe where liquidity is taken. As we move from liquidity to liquidity, after removal, there is no point for the price to move in that direction. On the other hand, look at the liquidity that will be our target. Do the same on the hourly time frame. Structure, premium, discount market, POI zones and liquidity. So, on higher time frames, we determine the expected direction of daily candle. If the trend is bullish, we don't open short positions today. So in result, we have daily bias bullish, and for example, on 4-hour time frame, we have POI zones like FVG, imbalance, fair value gap, and order block, for example. Then look at lower time frames such as 4-hour and hourly, searching for POI zones where reactions may occur and where we can consider opening our positions. The next step is confirming these zones of interest. For this, I use even lower time frames from 5 minutes to 15 minutes. I look for confirmation such as a structure break and observe how price reacts to our POI zones, what we call order flow, after which I open positions. These are the processes I go through before opening positions. Now, let's move on to a real chart. We always start with the weekly time frame, where we can note a descending structure since the price updated the fractal minimum. Additionally, we can see a short order flow, and preceding it, there is an order block. Now, let's mark our targets where the price could reach in the future. As for the nearest zones, fractal minimums or previous weekly low can be used as viable targets. So, currently, I would consider the weekly time frame in the context of further downward movement. On the daily time frame, we have a similar situation, with the price forming a structured break, updating the fractal minimum. We currently have a sequence of lower high and lower low, indicating a descending trend. We also observe a reaction in the POI zone, in this case our order block. Regarding liquidity, our targets will be similar to those on the weekly time frame, perhaps with an additional level. Based on our analysis of the structure, POI zones, order flows and liquidity on both weekly and daily time frames, we can assume that the price will continue its downward movement, and we have identified our targets. Now, armed with this information, we can switch to lower time frames following a checklist, the 4-hour and 1-hour, to explore options for opening our positions. It's immediately evident that the price is forming an imbalance and the trend is still downward. With the new minimum formed, currently we have a sequence of lower high and lower low. Poison, order block and imbalance are all present, so we'll be waiting for the price to move into our area of interest. The same principles apply to the hourly time frame. The final step is opening our position in the 15-minute time frame. We can see that the price is testing the poison with no reaction so far. Here, the price updated the minimum, essentially providing our last confirmation, breaking the local structure. For the entry, let's consider the order block. The stop loss is higher than the last high and set the targets as noted from the beginning, with the first being previous daily low. Since I am an intraday trader and close all positions within the day, our position did not work out on that day. Let's look at the next day. We can see a structure break within the poison, forming an order block from which we can open our position. The stop loss is higher than the last high and the targets are those we marked on the daily time frame, both short-term and long-term. As we can see, our trade worked out well and we closed the first target. However, since the weekly and daily time frames are still bearish, so we can continue searching for poisons and move in the short direction. But again, each trading strategy has its statistics and win rate. There will be unsuccessful positions, as in this example where the position wasn't executed the previous day, and that's normal. No one trades with 100% win rate. Therefore, start practicing on backtest initially, then adhere to risk, outline your checklist for opening positions based on your strategy, and I wish you profitable trading. The checklist will be available in my Telegram channel for free, so for those interested, the link is in the description. Make sure to subscribe, like, leave comments on topics for the next videos, and see you later, guys.